a daily fair value gap right here with an order block. So I was actually short from last night, and I wanted price to get into this area. So this was the draw to me. Higher time frame. We hit. This isn't marked on here, but we just hit an order block right here. So I'll just do this. If we look at this line right here, here's a daily order block. So I'll just throw a horizontal line right there where it begins. Okay, so a couple days ago we just tapped it and really moved away from it. So to me that was the signal for a short bias. But then we have to have a target for where's our short bias going to go to. And for me, it was this daily fair value gap order block combination. Okay, so next thing I want to do is I want to start. Here's my higher time frame analysis on the daily. Next thing I want to do is start looking at time frames little by little. So we go the 4 hour. What do we have right here? What's this? If this was on a 1 minute chart, what kind of entry would this be on a 1 minute chart?
A breaker entry. No. Order
Could
block
be.
entry.
This could be, we have a swing high, a swing low. This takes out that swing high, then takes out swing lows, and then runs up. So this could be a bullish breaker. I mean, that meets the definition of a breaker.
Yeah.
So if we just look
I
at
guess. Yeah.
this right here and highlight it, this is your bullish breaker. Also, we have an order block within the breaker, and this could almost be like a mitigation block.
Yeah.
But I would call this a breaker, Dom, just because it meets that specific criteria. And sometimes like you want to see like a fair value gap with the breaker. That's typically the pattern you see, but it's not always going to have that like with these higher time frames. So here's our area of interest, right? Like we want to see price get into here. This would be ideal. Okay, but we need to consider now this area of interest. So what do we get on the 4 hour chart? We get price dips down into this area. That is about CE of this order block over here, and also digs into this breaker and wicks away. So then if we just go down to the 1 minute, okay, now we want to start looking at what is price giving us. Okay, so remember I told you guys about daily opening range, right? And how it's 9:30 to 10:30. So we had this kind of distribution pattern, right? This is always a distribution pattern. Okay, we have run on liquidity into this breaker, a second run on liquidity, and a third run on liquidity. When was this? 9:57. Okay, so this is after here's 9:51, here's the 9:50. What does that 9:51 candle do? It just takes out this high of this little swing Okay, here's our fair value gap entry. Price comes down in here. Here's our breakaway gap. And then price moves away again. So other than paying attention to this, the 3 runs on liquidity, which remember ICT talks about anytime you have 3 runs on liquidity and price doesn't continue in that same direction, then we want to be really wary of price coming back down here. Alex, yes, a breakaway gap is always going to be either a SIBI or a BISI. So like here's your almost open, a run on liquidity, and then that run down. Here's that breakaway gap. Price didn't come here and return to here to balance. So you also have like a BPR right in this area. And so you could put that right here and you see price would come down into it and run away. So even if you didn't, get in right here, that's fine. But what do we have right here is we have a swing high, a swing low, price runs up and takes out the swing high and then displaces away. Okay. So this now, when price runs above this, this now becomes a bullish breaker. And so I had this marked out and you run it across and price continually supported multiple times by that bullish breaker. We had a fair value gap right here where price ran up through, comes back down, goes up through, and then notice how it runs in through here, but it will not break the bullish breaker or this order block right here. And then eventually runs through this fair value gap again. So we're looking at multiple things to, on the 1 minute chart, you're gonna have multiple like PD arrays that are gonna keep getting tested on both sides, bearish and bullish. So if you're thinking sell, okay, here's a bullish fair value gap or a bearish fair value gap that keeps getting violated multiple times. And then what do we have below here is that break in that order block, and then price runs away. So this was your telltale sign. Price expanding out of a higher time frame point of interest. And then now the bullish PD arrays are holding. And then price just runs the rest of the day. And so then when we start going back to higher time frames, okay, let's take a look at one more thing. What gives price the ability to make a nice run up from this area as well? Well, we have to take into account this is all the way over here. Let's move it right here. Okay, here's our swing high. Remember, you always want to know your PD array for the working range that you're in. Okay. This is an area of discount. So here's our equilibrium. So price initially dipped into discount in London. Okay, and it made a nice little run up. And it runs on buy side liquidity one more time. And so we have confluence with the 4-hour breaker in order block. We are in discount. It doesn't have to come all the way down to here. It just has to get below equilibrium. And then we have a nice run up into premium. Bullish breaker, missed that. How do you find that? Can you elaborate if you can, please? Yeah, I will. So those are those are things that you want to be aware of on these higher time frames. And so this is the always give yourself like a PD array for any major swing low to swing high. Okay, because this is going to let you know that when we start getting into discount, or we vice versa, we enter into premium. And if you look at, it already knows where it's going. So if you look at price before this swing was created, look at what we have here. Major rejections out of premium as it's stacking and building orders, accumulation for this run up into premium. So accumulating orders in discount, and every time it gets up into premium, taking out liquidity, what does it do? Grabbing those cheap orders, running them all the way down here, distributing and accumulating. That's how they build positions, pairing orders on both sides using previous buy stops, using a PD array where they already know price is going to go to. So this is premium for them, with buy stops resting in premium, and this is your accumulation. And then what do they always do before? Price always likes to run either buy stops or sell stops before it moves in the direction it wants to go. And so that's when we have that nice run up. And here's your distribution. Here's your run on liquidity. Here's your second run on liquidity. And now we took it, all this premium that was just distributed and accumulated. Now we pair orders back in discount from a heavy premium. So on these higher time frames, always set this for yourself so that you know the risk to reward when price comes down into an area of discount, or price just moves up into an area of premium, that we really need to watch how price reacts around these areas and not marry the bias. And it's like, could price have come down deeper? Yeah, for sure it could have. But that's why we want to start being mindful that the risk to reward is going to be, we're in discount. So we want to start seeing if price is going to return to premium.
Dude, that's an amazing point, Aaron. And just on that point, before you answer the dude's question about the breaker, um, that's something I've been really trying to like figure out for myself. Like uh, having the range denoted, so it's obvious where we're in with within premium or discount within a specific PD array. Um, I try to have like a really hard policy on not buying when I'm in premium, and not selling when it's already moved into the discount area of that range. That said, like, since it's fractal, you can move that down and re-gauge that where you're at within a smaller fractal as price is moving down. So my point is like, I'm trying to balance, like, okay, I'm not gonna buy or sell in premium or discount of the larger range, but then once price is moving up in, say price has moved up into the premium portion of the range, but it's running on a buy model, there's a way you like you can take that measurement down in a smaller fractal and buy in the discount of the premium for a continuation on the move. But uh, because, as you just said, the risk to reward is the risk is higher in those situations. Do you have a strategy that you use for, like, hey, I'm not going to buy this because we're so far extended, or I know that this is a buy model and I know the draw is higher, so I have confidence in the buy and the continuation of the move? Does that question make sense?
Yeah, 100%. Give me one quick second. I gotta check this meat on the smoker real quick. My timer went off. I'll be right back. All right, back. Yeah, that makes total sense, Dom. So what I try to do is that your higher time frames are going to dictate what you're looking for on the lower time frames. So if I go to the 5 minute, and like I was I think it was this day I missed this entry overnight. But when we go back to the 4 hour, it's like, okay, we had a run on liquidity, we had a second run on liquidity. And when we look at the daily, whenever we have two candles like this, that's a wick. So on the daily, that was a wick. So we just had this steady run up, kind of retraced a little bit, just rebalancing of this BISI, and then another run on liquidity. And so then for me, it's like now I'm looking for bearish PD arrays to take precedent. And so on the smaller time frames, now you're looking for short setups. And you have draws on liquidity right here, right here. You have your 4 hour order block right here. Okay. You have another order block right here. So these were originally order blocks that price was moving up out of. Okay, so now you're looking for price to come into these, and how does price react around this? Well, this 4 hour candle, price blows right through this one and digs into this one, and then kind of comes back up, or respects the mean threshold, but then blows through it again. And so when we take that idea that we've just had these runs on liquidity in premium, and we like to see price retrace, you can look for these setups on the lower time frame, and now you want to see your bearish PD arrays start to hold. So this was Tuesday. Here's our opening range. Okay. And after that run on liquidity, we have order blocks that are being put in. And what happens with these order blocks? Price respects this order block, displaces, creates this one, making lower highs, comes all the way down. And every time, look at where price runs up into. Oh, mitigation block. So it's starting to respect bearish PD arrays, right? And even on this Judas swing, what do we get into? We get into this order block. Price completely respects it, runs away, comes back up into this fair value gap, and continues lower, taking out this liquidity. So every time price moves up, we're looking for areas to go short. Here we have our Asian consolidation, and you can see prices trending down. We have relative equal highs right here. What does it do in London? Runs the highs and then comes down. Why? Because we're in a sell model after taking out a higher time frame buy side liquidity. So on the smaller time frames, sure, you can play the retracements. Like, sure, you could play this back up into here, but are you going to be looking for a price to like start reaching above here and working its way up above here? No. So you can play the retracements, but your plays that are going to give you the most bang for your buck are going to be anything looking to go short. And you're going to see all the PD arrays being respected. Here's price runs back up into a fair value gap in at that 950, that macro time right there. And then quickly pushes away, then creates this area of distribution accumulation, and then runs even further. Here was the Asian range. Okay, price runs up very little above here, runs down, creates equal lows, runs up, doesn't take out this high, doesn't need to. You have a few points right here, creates equal highs right here, and then runs this liquidity, this sell side again. So this reaction out of here, we have a news driver, we have the 3 points of sell side taken out. Now we're in discount, so now we want to start switching our framework to do bullish PD arrays hold. That's what you want to see, and you want to tell yourself that. What is price action telling me? Are bearish PD arrays still holding? So I would assume that if we were going to continue going south, we would want to see a run on like this liquidity right here, and then a move to run lower, taking out this. But what does price do around that area? Look at how price acts around these areas. Normally, if it was going to run liquidity and move lower, it doesn't have displacement. So displacement really gives you like the telltale sign of how price is acting. Just like when you go to take a let's say you're on the opposite side of the bias, and let's see if I can find an example in here. Let's see if there's any. Here's kind of a good one. So notice this bearish order block right here. Look how price comes up into there, rejects. That was the first news driver at 8:30. Okay. Look at what they do with price the first go around. They come up in here and it rejects. Okay, it gives the illusion that, oh yeah, price is still going to keep going short. Okay, but you have to look at everything all together. What continues to hold in this accumulation stage of price? And it's this bullish breaker that continues to hold. And you can see the candle bodies on this 5-minute time frame really holding that, and it just continues to make these higher lows. And then what does price eventually do around this bearish breaker? I'm sorry, what does price do right around this bearish order block where it rejected before? Boom, boom, boom. Just displaces right through it. You have no chance. Even gives you a little fake out with this one displacement, pulls back a little bit and then completely wrecks this. Okay, so that's a sign that these bearish PD arrays are starting to be broken. Here, this would have been a mitigation block. So if price ran up to here and rejected, that would be a bearish mitigation block is holding. But what does it do? It rips through that area. It's saying nothing bearish is going to hold. That's what this tells you right here. And so you want to identify those, the PD arrays, and how price is responsive around them. And so that's how you can set it on your lower time frame, where you can say, you know what, I can switch my bias to bullish, and I can now watch PD arrays and make sure that the bullish PD arrays are holding. And now I can find entries all along the way that support that narrative. So
Dude, that's fantastic, and this is a perfect example. Like where you're at, just above the opening range in
mitigation.
blue there. Um, eh, yeah, that entry right there, that little down close order block, just above to the right of the opening range in blue.
Mm-hmm.
Um, yeah, exactly. So that technically is in the premium of that specific PD array right there. So, but because of everything you just outlined, you can have confidence in that buy because we know that we've had a change in the state of delivery. We know that the bullish order blocks are now they're supporting price moving higher. So you can have confidence in that buy, even though you're buying technically in the premium range of that PD array.
So remember too, if like kind of what Dom's talking about is that, let me scrub back here. Okay. When you get down to the 1 minute, if you're only looking at the 1 minute, you're going to have multiple PD arrays on both sides that continue to get broken. So it's almost like you're like guessing, right? You're like, okay, well, this like didn't break above here. It took out this liquidity, but then it came up and now it's like rejecting this area, almost like an order block. Comes back to this fair value gap. Oh man, look at it, rejects this fair value gap. So you have to, it's always like the confluence of your higher time frame and what's the probability or the risk reward of what higher time frame tells you. And so that way you don't get caught up in the 1 minute and start falling victim to, because they're gonna throw multiple PD arrays on the 1 minute because it's such a small time frame, right? Like if you went to the 15 and looked at this same area, what do we have on the 15? We have a down close candle into a higher time frame point of interest and displacement up and through this candle. And so what does that make this candle right here? A 15-minute order block. So what do we want to see price do? I want to see price return into this order block and take off. Well, look at the 15-minute. Price comes down into this order block, perfectly in there, and freaking displaces away. That once you start zooming out a little, all this stuff right here, all this overlap of the wicks on the 1 minute time frame, that's meant to trip you up. They're going to try to get people off sides. That's the goal of the algorithm, is to get you off sides, because look at this. They don't want everybody catching this move. This is a hell of a move right here. That's big money. That's payday. That's your rent. That's whatever. So
Hey Aaron, I'd like to highlight something else about what you were talking about with the 1030 candles and moving forward, and it's the diversity between the candles of NASDAQ and ES. The price action is much more clear of where it wants to go with NASDAQ in that area than it is with ES.
let's check it out. So I have a chart where I keep all three indices up, and I was actually watching all three and NQ took out sell side before YM and ES did. And so because it took it out and it started running away, that was your SMT divergence. Here, we'll just throw this up real quick.
What time frame do you keep those three charts on, Aaron? Just for clarity.
NASDAQ, let's go. I believe I had it on the hour chart. 1 hour. 1 hour. Let's go to YM. 1 hour. Okay. I haven't had lines drawn on them. This is all from this morning's price action. Okay, so you have NQ that ran lows. This was lagging. Never took out this buy side, but grab this. Doesn't take out, I'm sorry, takes out sell side, doesn't take this sell side, doesn't take buy side. This basically rebalanced this CIBI. And then ES barely takes this low out. So this made a lower low. ES and YM made lower lows earlier on compared to NQ. And so this runs that liquidity. And look at on the hourly chart, it's not making a strong move to like run this sell side out. These down candles are much larger because NQ was already down in this area, whereas this took it out first. These were still having to come down to grab sell side. And Dow was lagging the most. So it was like first, second, third. So you did have that where this was YM and ES were kind of playing catch up. So again, I've been looking at NQ more because I just feel like the chart's been a lot cleaner. And you only need like 1 or 2 cons to make a good amount of money. You really don't need to load. I think if you caught this, if you took 2 contracts down here, you know, and now you're looking for a price to rebalance this area. And what do we have? Okay, we have mitigation block, order block. So we look for price to return to this area. And where does it return to? It hits that order block and moves away. So that was about, with 2 contracts of NQ, that was about roughly a $6,000 move with 2 contracts. So I just feel like NQ's been kind of cleaner to track and play. And for me, that was due to on the daily when ES started doing all this with tons of gaps and all this like overlap. To me, that was like, dude, that's not giving me, this doesn't tell me anything other than price is constantly overlapping. This is like, it's like accumulation on the lower time frame. You know the days when you look at the 15-minute chart and price looks like this, what does everybody say? Oh, I got chopped up. So this looked like disgusting to me on the daily. versus NQ, where you're having nice formations of things. Down close candles, creating order blocks, candle runs above it, candle runs down into the order block, displaces away, accumulation, accumulation distribution, down into the order block, displaces away. It's just a much more cleaner movement of price and structure. So that was my takeaway for today. Oh no, not 5 months. Yes. Here's a nice little entry right, tips right down into here for another run up.
This is what I wanted you to highlight before, is if you look at the formation of the candles from 10:30 to 11 on NASDAQ and how nice and clean of an uptrend that is with the wicks. And then if you look at ES, it's just dips down further into it.
Yeah, you get a bigger retracement, and that's okay. You get a lot of extra wick action, but at the same time, you put your fib projection, and it's coming right down here into optimal trade entry. You have a fair value gap right there, and you could say this isn't, even though this gives you a small wick, you say here's your order block because here's your candle body and price runs up above it, and so you want to see price come back down. It really displaces away, so you really want to see price come back down into here. So you have your optimal trade entry into this order block, and then price displaces away. So it is a little more messy because it had this kind of down, then up, then runs down deeper. But always use these PD arrays. Look at this downturn. Doesn't break into discount. You want to see price in an area of discount if we're in like a buy model. Vice versa, you want to see price in an area of premium if we're in a sell model. But this had some good retracements. Nice, right into here, and then runs up, takes out this. And we have this that gets held kind of real choppy. Takes a while, but then eventually it runs up. But yeah, hopefully that helped and gives a little clarity on some things with higher time frame and premium and discount. But I gotta get jamming. I just wanted to go over that for anyone that had trouble with today.
Awesome call, bro. Thank you, Aaron. Have a great night and enjoy your roast or whatever you're making.
Yeah, man. Thanks.
Yeah, thanks, bro. Take it easy.
Yeah, you got it. Hope you guys have a good rest of your day.
Thanks, Aaron.
Yeah,
See you, man.
got it. Okay, we'll see you guys later.